Hello, everybody, and welcome to today's episode of Trade the Chain. It is August 9th. It is Tuesday, and thank you for joining us. I'm joined here along with Trade the Chain's Director of Research, Nick Mancini, and the everyday guy, Doug DeRosa. So thank you for joining us today. Really appreciate it. Obviously, a lot of eyes are on CPI numbers for tomorrow, and Nick is going to go over that, as well as what's been happening with trading opportunities leading into it, because the irrational markets have been kind of funky lately. But we're going to try to break it down, and you'll get a gist of where our heads are at going into it. So that'll be that. Other than that, anybody have anything fun to say today, or is it just another dismal workday for you guys?
All eyes on CPI. I think it's probably one of the biggest data points that we'll have potentially for the month. It could spell even more pain at the end of the month if we get a bad enough CPI print. With Kramer. I know Kramer's the last person I want to listen to, but hearing him kind of start to say that, the whispers have started that CPI is going to come in above expectations. So maybe he's getting good information for the first time in his life, and I hate to be in that camp, and I'm not fully in that camp yet, but I do recognize that CPI is really the big focus, and people seem to be a little bit more casual than I would expect about it, especially some of my macro guys, which is a bit concerning to me. So it'll be very interesting tomorrow morning.
It's also, we're going through the dead zone month of August too, right? So whatever happens in August, we can just get whipsawed at the FOMC come September, and so you never know. But all right, let's dive into the macro markets right now, real quick. We have our total market cap sitting at $0.09 trillion. That's down about almost a $1 billion from yesterday. We have Bitcoin sitting at just above 23,000, minus 3.75% for the 24-hour, with a almost perfect neutral sentiment score. Ethereum at 1692, down 4.4%, with an exact almost neutral sentiment score. Our hottest on social, we got Loom Network leading the way with a 1,300% increase in Twitter activity, price down just under 5%. Spell token just shooting through the roof. Up 500% in Twitter activity. Price is up nearly 30% over the last 24 hours. I did miss that. I wasn't prepared for the spell boom that happened, but there it is, folks. We got let's see, we got Seller Networks down just under 7% up there, and Zcash coming in 8. We have Spell obviously leading the way here on the 24-hour price chart, as well as Grin, which is a privacy coin, up 22.39%. Maybe that has something to do with all the privacy chatter that's going around.
Yeah, ZEC was our coin of the our TTC coin of the week in the newsletter, and we specifically put that in there based on the privacy coin sector focus, just due to the Tornado Cash news. Anytime anything happens related to privacy coins or something that's related to privacy in the cryptocurrency sector, whether positive or negative, typically privacy coins will have some beneficial price action, and ZEC was already boosting in terms of sentiment. It had a couple percentage points higher in terms of price action, and now again we're what is that, 3%? So if you saw that in the newsletter yesterday and you traded it, you at least got a couple percentage points headed into today. So not a bad opportunity there.
And also, speaking of which, if you don't receive that newsletter, because we do, we've started, we're going to be doing short daily recap newsletter, as well as the big Monday analysis newsletter. And to what Nick was mentioning,
You there, Doug?
I am, yes.
Okay, I just messaged you guys. Sorry for everybody who's watching. I think Alex may have had a Wi-Fi issue, considering Puerto Rico, considering or
Well, one
sometimes
of the
does not have the
hospitals
best
there.
internet connection on the planet. So
Yeah, one
what
of
you
the
say, Doug?
hospitals there didn't have power for like the last 24 hours, and the generator didn't work. That's really an interesting place. But yeah, you and I can continue, obviously. So
yeah, we can continue on. So we were talking about privacy coins and the newsletter and things like that. So what Alex was saying is we're going to be having a daily newsletter that comes out with a short form video recap of whatever is going on in the markets with a few trade ideas. We have the daily newsletter to kick things off. Yeah, Alex just confirmed that his internet went down, so he's going to do his best to tag back along, but it might be a bit of a shorter episode today. So apologies to everybody who misses Alex's voice. But in relation to our content, Monday is obviously a newsletter. Thursday we have Coins of the Week, who Doug has been gathering and scraping the interwebs for various opportunities and analysis for us. And then we'll start coming out with a little bit more. We already have some daily content, but we're going to distribute it a little bit better to everyone who very much wants to pay attention. So, Doug, any other talking points? Oh, Alex is coming back. Oh, your internet's back up. We were worried that you were going to be down for the count.
Well, that was interesting.
Well, you live on a remote Caribbean island, so yeah, stuff's gonna happen, I guess.
I mean, I was like, wow, what's going on?
We picked up right where we left off, though, and just covered the rundown for our kind of new content schedule that everybody should be expecting.
Okay, good. And that is that link is posted. I actually pinned it in the chat, so take a look at that.
There you go.
All right, Nick, why don't we head over to your screen and get rolling on the charts?
Yeah, so some wonkiness in the markets. Oh no, my little trend lines disappeared from the video earlier today. Let's go ahead and get those drawn back. So, I think it's quite obvious that there's been some wonkiness in the markets. We discussed yesterday that prices were tipping towards the major resistance point of 4,200 on the S&P or 420 on SPY, depending on how you're looking. And clearly we've come off of those highs pretty severely and back down to the lower end of the trading range. And when you're drawing ranges, people love to focus on every single touch of the trend, but clearly we have a swing failure pattern on both ends of the spectrum. And Alex and I had a short conversation about this, about the quote unquote war that was going on at this level. And clearly someone is trying to really hold on for dear life, above that 4,100 level. If we kind of start breaking down here and below, then, clearly it's pretty much clear skies, as we head lower into 4K and potentially lower. So big concern there. And if we kind of zoom in, we're not forming, the sexiest pattern in the world. If you're looking at, just the basic candle pattern. And anyone who's a candle pattern enjoyer here is going to say, hey, this kind of looks like it was, trying to form a bottom here. We've got these tweezers, but although this candle is young, we're only 10 minutes into the hourly, it's already wicking under the VWAP, which is not a good sign considering the VWAP has been our resistance since 6 in the morning Eastern, 3 in the morning my time. So if this continues to form a wick higher and a body lower, then it may spell us coming out of this channel. And of course, if we can catch at this 200 moving average, and there's reason to believe that the S&P would try at least to try and tag back 4140, which would be confluence of resistance at the 50 moving average, and then potentially 4150, which would likely be confluence of the 100-day moving average, along with the major POC, which signals the highest contended area of trading. And of course, if we were to flip, 4140 to support, tag that and continue higher, then, potentially we get back up to recent highs, but then we have to watch out for a double top. And of course, what's the magic number tomorrow? That's CPI. And that's going to happen
Sorry, I'm having trouble connecting to the internet.
I'm sorry.
It looks like an issue with the router and Echo device, so try restarting them.
This day is filled with all the
What a day
happenings.
today.
Alexa literally yelling at me. I'm sorry. I just unplugged her. I hate when does that happen to anybody else? Like your Apple Watch will start talking or Alexa will start talking.
No,
she's
my
hearing too much.
girlfriend doesn't talk. She just leaves the room.
Alexa's hearing too much. I'm gonna have to destroy her before Jeff Bezos comes down and gets me in trouble. So, but in reference to that, that's kind of this is the range. If we break below this, and we cannot hold 4,100, then we are likely going to continue lower. And CPI is tomorrow, so CPI is going to hit around this time frame. So let's draw like kind of a line in the sand here of where CPI is going to hit. So CPI is going to hit right about here. So if you're bullish, if you think inflation has come off of its highs, then you are trading for a boost to happen into this time frame and likely higher. If you think that CPI is going to come in worse than expected, and that inflation has not peaked, then you're probably trading this to continue lower and kind of down into this time frame. Now, for Bitcoin, the analysis is more or less the same, although we've discussed this before. Bitcoin has looked a lot weaker compared to equities. And so if we get rid of these POCs here, it becomes a little bit clearer. These are all of the trends. So I would expect Bitcoin to, no matter what happens, to catch around maybe 22.5, 22.7. If that fails, you expect it to catch around 22 to 21.5, and then all the way down to, nearing 20 if that breaks. And so, that's kind of, you can see just how, much room there is on the chart if we can come down. So I kind of like that 22 number, or 22.5, I should say, is a really good catch number. If this level does break, we've definitely got plenty of room on the higher time frames. And of course, this is supposed to be an ascending triangle. And if we keep just busting down below these, clearly that's going to be invalidated quite quickly, and not a positive sign. So very much similar to the S&P 500. Let's draw our little line in the sand. And so we are looking for tomorrow morning right here. So this is when CPI print is going to occur. So if you're a bull, then you think this is going to catch and continue higher into tomorrow, which, definitely seems a little bit difficult here. And if you are a bull, you think this is maybe going to consolidate and likely continue heading lower into CPI tomorrow. And then obviously, we have very similar formation with Ethereum, but it's actually a little bit more technically beneficial if you are trading purely on the technicals, because catching on the 50-day moving average on the 4-hour, and it's catching on the 200-day moving average on the 1 hour. So, very similar. If you are bullish heading into tomorrow, you want this to curl up. And if you are bearish, you want it to consolidate, maybe hit 1710 as a high and then start heading back lower. But I think, right now, considering there's a quote unquote front run for potential bad news that already occurred, it would make sense to at least see some consolidation and a slight effort higher. But it does seem that, if you're looking at the Bitcoin chart, it looks extremely weak. We broke beneath that trend that's been valid for since the 27th. And, Ethereum is more or less kind of hanging on for dear life within its trend, and having obviously a struggle to break higher. So in my esteemed opinion, the market does not seem that CPI is going to be positive tomorrow based on current positioning, or else we wouldn't have seen such a violent sell-off and such weakness. And Bitcoin, I think also this is something that Alex and I discussed yesterday that's very much worth mentioning. Let's kind of get rid of some of these trends, but the current formation that we're in right now looks very, very similar to the bottom that we saw in 21 and the bottom that we saw in early of 2022. Now, these were not true bottoms, obviously, but they were local bottoms for higher time frames. And if you just flip this on its head, if you went inverse, which I think we actually can, I forget where the inverse setting is. I'll find it later and post it in the Trade the Chain community. But literally, I mean, this looks like it's the same formation in my eyes, just flipped. And so, you know, there's been plenty of times where Bitcoin has faked going in one direction, looking, you know, with a great looking formation, and completely gone the other way. And I have a very sneaking suspicion that we are here, and we are headed, you know, for this type of move, but in this direction, which would, you know, potentially bring us to recent lows, potentially lower, depending on, you know, what else is going on in the macro condition. But, you know, I said that to Alex yesterday after we got off our call, and I posted that in the Trade the Chain community. And it seems like it's already starting to come to fruition in terms of the price action that we expected based on that type of formation.
All right, cool stuff. I like it. Now with my internet connection kept playing up again, so I missed actually some of that. If we have to, this is what I want to know, Nick, because you and I, you know, we're in the markets every day and trading. While Doug is, you know, backing us up, looking for places, you know, how we're going to save money when the world ends. But when it comes to the CPI numbers, what are you expecting to see with that data print tomorrow? And based on what you say, what do you plan to see in, you know, come the FOMC in September?
So everybody, you have my chart, or can you mind? Yeah, there you go. So this is a financial calendar. I like to use market watches. It's just I keep it as a tab. It refreshes. I've got next week's stuff. I've got you can even go back in previous weeks. But so I love this calendar. And of course, it gives me the two main data points that I care about tomorrow. We have CPI. I mean, technically all four of these matter, but year over year is typically what you'll see quoted the most. And so the forecast for CPI is 8.7% year over year compared to 9.1% of the previous month. So meaning that, you know, basically July to July was 9.1%. Now August to August is expected to be 8.7%. Now core, which I believe is minus food and housing, is expected to actually increase to 6.1% year over year compared to 5.9%. I'm sorry, I had that backwards. It would have been June to June, and now we're going to look at July to July because we're obviously in August right now. So apologies about that. But basically, the economists, whoever these people are, expect regular CPI to lessen. They expect core CPI to increase. Now, the whispers that we've been hearing have been a potential 9% or more CPI print tomorrow. That would be 0.3 percentage points above the expected, which would be a miss. And I think a miss in that range would probably spike down the markets pretty hard, because even though you could say it's coming off, you know, the previous month, it's barely coming off at all. And if it was above 9.1%, then God help us. And I'm sorry to put it that bluntly, but if inflation has not topped at all, and the Fed has already raised into what, 2.5%. I mean, that's a scary situation, because how much harder does the Fed have to work when all of the work that they've done has done nothing? And I think that's what the market's going to have to reckon with and figure out exactly how to fully price that in, because right now they got a little euphoria because of the same idea that we talked about weeks ago, which is, oh, there's a data gap. Oh, you know, oil's coming off of its highs. Oh, inflation must be good. Well, we've also been talking about the fact that energy prices should get more difficult heading into the end of the year. And you know, there's a bunch of other issues such as droughts and issues of, you know, continuing war and things like that, of actually, you know, executing the global supply chain to when it will be its most needy, which is when most of the developed world is in the cold time. So, you know, we definitely recognize the massive bullish opportunity, but we also discussed yesterday how weak crypto was in the face of equity strength. And now that equities are weakening, crypto is also weakening further. And if we get an inflation print that is above expectations, potentially higher than the previous month, both of those scenarios are bad. One's a little bad, one's extremely bad. So, and then of course in the reciprocal, if it's not all doom and gloom, if we have a good print, meaning that inflation is at 8.7% or lower for CPI, then we should see the markets rally. And I don't know how hard they would rally, but I would expect, maybe Bitcoin 28K, Ethereum 2K, maybe in the sights in the short term as people clamber into that trade. But like I said, if we get anything around 9, it's gonna be fireworks in the wrong direction, I think.
Okay, so I want you, for anybody who missed it, repeat the last sentence you just said before 9%. If we see it go to whatever percent, what are we expecting?
So I mean, I would have to draw a picture to really put it bluntly. So if it's above 8, if CPI comes in above 8.7% tomorrow, the market is likely going down. If CPI comes in at 8.7% or lower, the market is either likely going to take that neutrally, meaning we'll see a lot of volatility in the same range, or it will head higher. If it is 9% or more, hold on to your handlebars and short like crazy.
Yes, sir. I completely agree with that statement. Doug, if we have, let's just say, for instance, we print, 8.8 to 9% tomorrow, what do you think that's going to have as far as a real world economic hit for, just the regular folks like us?
Well, food and energy costs, especially energy, have come down over the last month. But we've discussed before rent. Rent's a fixed cost, and that hasn't dropped, right? So I don't think going to Nick's point about that high number, I think it probably does come out a little bit higher. I think people are just thinking because food and energy have dropped a little bit. But you put that in. Ford had really an interesting press release today. Their F-150 Lightning, which is their electric truck, citing increased commodity costs. Now, these are cars not currently in the pipeline, but going forward, they're raising prices 10%. So if you have the theory or the thesis that commodity costs have peaked, Ford isn't saying that. They aren't lowering prices, right? They're raising prices. So I think the environment is still here, again, stripping out gasoline and some other things. But I think the number is not going to be great. To Nick's point about the market action or the tape action today, certainly on the equity side, people are getting ahead of that in a way, and it looks like they're trying to lighten up some positions in front of that. And in terms of the market in general, you look at some of these companies that led equities higher, like NVIDIA. I mean, they're really starting to break down. NVIDIA looks horrible, and they said some really bad stuff last week. So I think the sentiment is starting to flip over a little bit. And we did lose Alex. He froze again for the
I know
12th time.
So this is something that I brought up yesterday to the Trade the Chain community and others. I guess I can't because Alex is in control, but I wanted to pull up the there he's back.
Look at that. He's back.
Yeah, it keeps working. It keeps working without me. So,
is it a windy day there? Is it a windy day on the island? Is that the problem?
Alex, can you pull up my my screen?
Let's talk about my problems for a second, Nick. Okay, like my interweb. Here we go.
Alex, can we discuss Domino's Pizza pulling out of Italy? Why would they try to make pizza in Italy? That's just doesn't make sense.
So crude oil futures. I will be watching this as a bit of a counter trade to risk markets. I think anyone who's been ear to the ground and has CNBC on 24/7 like I do, and reads all the financial journals, the hot trade that has been suggested, if you know where to look, is short equities, short risk, long commodities. And why is that? And why has Doug been tracking oil so much? Well, it's just a fantastic proxy for inflation. If what's our biggest inflationary cost right now that affects everything? Energy. What's the most used energy source? Oil. One could argue coal in Germany. Ha ha to all all of the climate freaks over there because they don't want nuclear, but that's a time for another day. But oil is what makes the world tick. So if oil is increasing, inflation's only going to get worse. Things are only going to cost more. Life is only going to be more difficult, which means that why would you buy risk when the ability to afford risk goes down if energy prices increase? So something I will be using is not as an exact one-to-one, but over the next several weeks, potentially months, if oil is continually gradually moving higher and continually looks bullish, I will likely continue to be bearish on equities and risk. And it's not, like I said, it's not going to be one-to-one. It's not a perfect trade, but I think it is a fantastic idea to give someone confidence in a trade, in a intraday, intra-week type of trade, is that if oil is bottoming, equities are likely top. So not a definite, and there's clearly a lot of interest, in that 6,000, 5,500 level. But I would be surprised if oil does not start picking up here in the next by the end of August. It would very much shock me, based on where we're currently at in the macro situation. So this is something you'll hear me talk a little bit more about, and something I think is worth keeping on everybody's radar. As people know, I love my inverse trades, and I love my canaries in the coal mine. So anything I can use to get a leg up, I'm going to use it. And this is currently something that I'm looking into and tracking.
Any interesting or suspicious exchange activity happening with the chart?
In terms of oil?
In terms of crypto exchange flow.
Crypto exchange flow.
We always like to keep an eye on market manipulation via market makers. So
yeah, so I haven't, in terms of like actual order flow, I haven't noticed anything weird. We did, and so it's something that I'm not probably going to be able to show perfectly here, but I mean, I think you can get the gist. Look what's been selling off for the past week. Look, this is why we're so weak. So this is perp CVD. This is spot CVD. Look what's holding us up. It's all synthetics. So either you think that we're forming the same bottom pattern here that we are here, and we're going to head higher because synthetics are betting on that, or eventually, or you assume that the tide is going to turn and spot is now going to lead synthetics, and no one's going to pick up the spot to then lift price higher. So in the grand scheme of things, basically what this shows is that open interest has been increasing, while spot open interest, meaning derivatives, synthetics, things like that, while spot interest has been decreasing. And we know that you will not have a continued synthetics rally without spot to come in and obviously drive price higher, because you can only do things so long in the synthetic market without it translating over into spot. So you have two options here. You either say we're done, or you think that we are forming another bottom and we're likely going to head higher soon. And so this is just another indicator that, we are now in another decision zone. In terms of actual exchange flows, I mean, they've still been decreasing. We have not seen a massive amount of spot pick up. Here's a really good proxy for this is USDT dominance. So, I mean, that honestly, I would want to buy that, right? Like if you're a technical trader, bouncing on a POC also coincides with the previous range. It is showing multiple signs of bullish divergence, and we've got a lot of interest here. So this looks like it's potentially a reversal, which if you think that USDT dominance is going to grow, what does that mean for everything else? It means you're selling assets to accrue USDT. So in that sense, then you would assume that that's a risk off indicator, because it seems like USDT dominance is going to grow, which means more people are in a stable coin as opposed to being in a volatile cryptocurrency. So there's another proxy for you that says that a bottom, or that we may be signaling a reversal here. So potentially spot buying may not come back. Oil may be lifting higher. People seem to be buying USDT en masse for their cryptos. And CPI is expected to come in tomorrow higher than anticipated. So, I'm very much willing to hear arguments on the other side of the spectrum, but right now it's, signs are pointing to a more bearish outcome over in the near term, at least.
Quick question, Nick, and then we have PPI Thursday as well. So let's say I was lucky enough, smart enough, sophisticated enough, and I bought Bitcoin in the 17s and 19s and ETH 900 or so going into these numbers, which could change these markets to the downside. Let's say I went all in with all my dry power. You would do what here from a trade point of view? Would you take off half and hold half? Do you now both of these are kind of 10% off their most recent highs? Would you say now you should be taking off some because they are 10%? What would somebody, if they did buy recently, because they were nice moves right off the bottom, what advice would you give people to be not necessarily defensive, but hey, you got some money, you made a profit. This is what a couple of avenues you should do. There's obviously not one.
Well, I mean, if you didn't take profits when Alex and I were saying that the highs are in, then I don't know what to tell you. I mean, I'm not going to tell anyone what to do with their money ever, and that's why I love the trade the chain gig, because I don't sit there and give trade calls. I give the full spectrum, and then I give my opinion on where I feel that the cards are going to end up based on the entire spectrum. I was honest with everybody that I personally did not buy in, but Alex and I were clearly trading all of the volatility, which I think was good. I will admit, I think it was a mistake for me not to go and buy a lot of ETH under 1K. But given the current scenario, if I had, I would have offloaded it at 17, 18 anyway. I wouldn't be sticking around for 2K. And everybody who's listening has likely heard my opinion on the merge. If you were in our Twitter spaces last week, by the way, we have another Twitter spaces today where we will probably bring up similar topics. I don't believe in any one single trade other than what the Fed is telling me. And the Fed's actions are based off of inflation. And I just gave you, 3-4, inflationary metrics and ideas to start playing with. So if you're not taking profits on your trades, then, then you're simply just buying. So, at some point you have to take your money and walk away and go have fun or buy your house or treat your spouse or family, whatever. But, if you're not taking profits in a bear market on a 100% rally, I don't have much for you.
I got to tell you, you should. I mean, my watch collection grows every month. It's basically a savings account for profits at this point.
Someone asked and put it into what stable. If you're not diversifying stables, you're also doing it wrong. Definitely need to diversify stables. Alex is frozen again.
Yeah, the reason why I ask is because, again, NVIDIA, Facebook, again, no different than some of the coins in our space, right? That people get married to them, so to speak, and they are deer in the headlights. They don't know where to take profit. So I think the one lesson we're all learning, nothing is ever too good not to take a profit in, like you said. At some point, you gotta ring the cash register at some point.
Oh yeah, I forgot Alex is frozen. Well, at least are my charts still popping up? My charts are still changing. Nice.
They are, yeah.
Cool. Yeah. So I mean, interestingly enough, though, I mean, this is I think this is probably one of the biggest signals for anybody who's paying attention. If this daily closes as a bearish engulfing heading into CPI, I mean, there's very little that will likely help us from the perspective of, both fundamentals and technicals. So I think, this will close at 8 p.m. Eastern, I think. So 5 p.m. my time. So, I mean, I highly recommend, keeping a lookout for that. We'll obviously keep the Trade the Chain community updated and all that fun stuff. But if we close with a bearish engulfing on the daily, and I believe we're forming similar on ETH, let's double check, as I've not seen it since the morning. Yep. So, bearish engulfing Bitcoin and Ethereum near the highs. I honestly think that I saw this crack out of the range very briefly. Yep. So we were literally just talking about this. Look where it's poking out of. The range we mentioned. So, I mean, it can definitely still swing failure pattern. Like I said, 4,100, it's still got the opportunity to save that and swing back into the channel. But It's not even fully oversold yet, and it's poking out of the channel in a very ugly formation, in my opinion. So clearly there's some risk off happening on equities and crypto as we head into CPI. And I think we know where that may lead us. You know,
All right.
whispers always occur before these types of things. So,
folks, thank you for joining us today. Don't forget to go to the pinned chat, live chat. That's our new free market newsletter, which is in depth every Monday, and our coins every Thursday, and our daily recaps midday. It's absolutely free, so please gain some insight. Sign up for it. It's a great read. If not, you can always unsubscribe too, but it's not costing you a penny. Twitter Spaces tonight on the Trade the Chain account, 4:30 to 5:30 Eastern time. And you know, I apologize for all the internet trouble I had today and the freezing. Please smash like on your way out the door. Thank you, Crypto Man. Patrick, you're late today. Sam Bankman-Fried, I'm glad you got out of Mar-a-Lago. Shout out to Crypto Man, Vasek, Kronos, and Obi-Wan for joining us today. We appreciate you all. Have a great day. We'll see you tomorrow. Thank you.